Kawasinga, Florida. She's a counsel, one of the ABIN member, as the SG has just concluded. So welcome as you introduce your panel.
Thank you so much. It's been a long journey, as Victor knows, and ABIN members from Rwanda know. Since last year, we've been planning this, and this is very exciting that we're all here. I'll call the panelists one after another by introducing them, and then you come and take your seats. I will start with the SIPE representative, Mr. Lars Benson, who is the Regional Director for Africa at the Center for International Private Enterprise in Washington, D.C. He works closely with partners representing the private sector, civil society, and government to implement policy and regulatory reforms, enhance anti-corruption initiatives, engage in public-private dialogue, and improve democratic governance across the continent. Welcome, Lars. Next panelist is Mr. George Weru, who is a forensic partner at PwC and the East Africa Market Area Head. He's today representing PwC Rwanda Limited, but I believe he's coming in from Nairobi. Welcome, George. George is a partner in PwC's business restructuring and forensic practice in East Africa. He has over 15 years' experience in undertaking forensic investigations, fraud risk assessments, and advising organizations in the implementation of effective fraud prevention programs. He has been involved with both public and corporate sector organizations in East Africa, including this country, in West Africa, in Mauritius, and the Cayman Islands. George holds an MBA in Finance and Strategy from the University of Leicester and a Bachelor of Laws from the University of Nairobi. He's also a certified public accountant from Kenya, certified fraud examiner, a chartered financial analyst, and he is a member of the Association of Certified Fraud Examiners. Welcome again, George. Third panelist, Ms. Marie-Giselle Dukuze from Rwanda Finance Limited. She is the Legal and Compliance Officer at Rwanda Finance Limited, or the Kigali International Finance Center. Welcome, Giselle. Last but not least is my colleague, who is an ABIN representative in Rwanda, member, Dr. P. Habimana, who is an advocate, a member of the Rwanda Bar Association, and the managing partner of Amilex Law Chambers in Kigali, Rwanda. He is also a member of the Africa Business Integrity Network in Rwanda, as I've mentioned, together with Eve. Eve, can you say hello? So these are the members of ABIN here. Maybe let's start from the beginning. Lars, why did you choose to work with KIAC, and why is SIPE interested in coming to Rwanda?
So why Rwanda? A couple of reasons. One, when we take a look at sort of economic growth across Africa, when we take a look at a strong relationship between the United States and different African countries, when we take a look at the example that Rwanda sometimes plays in the regional community with regards to good governance and anti-corruption, when we take a look at the new growth opportunities that you have for businesses, then Rwanda remains an important potential partner for this SIPE initiative as we move forward. That said, we're now currently in 16 countries, and we continue to expand this effort across Africa. Because even if I took a look at Transparency International's map, or the Corruption Risk Forecast, which is a new tool that we use to evaluate corruption, and I take a look at Africa, I have unfortunately still, when we take a look at green being good and red being bad, I still see a lot of red, or actually the majority of countries remain red. So corruption and the perception of corruption remains a problem across the continent. And so why did we partner with KIAC? So we partnered with KIAC because we saw that there was a strategic opportunity here. Given the work that KIAC does in terms of arbitration, they essentially see some of the problems that firms are having or encountering in real time in terms of disputes and in terms of other types of issues, probably related to governance more than anything else, in terms of the type of market. So they have the inside knowledge of really what's going on in terms of Rwanda that I think is very important in terms of that. The second thing is that they are members and affiliated and associated with organizations like PSF, but they're also tied into the law community across the country, right? So I think that is a second important reason. So I think this is a strategic partnership for us was a given, because what we found here in terms of KIEC is definitely a partner that has a vested in a strategic interest in terms of the type of work that we're doing, which is to improve corporate governance, business ethics, and integrity in Africa. Thanks.
As a follow-up, you kind of touched on the fact that Rwanda is doing very, very well on the anti-corruption index. Why should private firms and finance institutions be concerned about business integrity in Rwanda?
If you take a look at the Transparency International, Rwanda continues to move a little bit up in terms of the rankings. But I don't think still everybody's goal should be to try to be at the top 10, right, in terms of that. When you take a look at the perception or the corruption risk forecast that I was just talking about, and I'm happy to provide everybody with that, Rwanda is essentially either stationary or moving backwards in terms of your fight against or improving in terms of what we call transparency, integrity, and accountability in terms of the methodologies that they are using. So Rwanda does have faced certain challenges, particularly with regards to this, but you have a dynamic private sector here. You have a growth opportunity in terms of Rwanda continue to grow at 7 to 10%. You have a vibrant entrepreneurship culture, and you have a good enabling environment. So this portends good things for Rwanda's future if we're able to sort of also add to that business ethics and integrity.
Let me bring you in here, George. How relevant do you find compliance and business integrity in companies' operations, in particular in the environment in Rwanda, and maybe in the region, since you work regionally as well?
Yeah, so to start with, obviously PwC, we do tax assurance and advisory. And in doing that, we interact with clients and organizations from private sector and public sector all the time. So in that regard, we get to see what is happening in terms of the issues of business ethics. In addition to that, we actually do undertake a survey that we call the Global Economic Crime Survey, which helps us to get perspectives of what is happening within organizations. We did run one of those surveys last year, and as I capture some of the insights, I'll leverage on some of the insights from that. So how relevant? So one of the key things that we see is actually business integrity is critical for the sustainability of businesses. One, because of the cost of corruption and bribery. So one of the findings from that survey, for example, was that in East Africa, 67% of the businesses said that they actually experienced some form of economic crime within the year. Now, we didn't have a survey specifically for Rwanda this particular year. In the previous years, we've had a survey for Rwanda. It has shown that the prevalence of incidences of economic crime is a bit lower in Rwanda, but not zero. So what that then does is that one of the things we asked is, what was the cost of the corruption? So the incidences of corruption or bribery per the survey ranged from $50,000 to $1 million. So there's actually a direct cost to the organization in terms of the corruption that is happening. The other insight that we got is that it reduces competitiveness within the business environment. The study showed that 60% of the organizations found that, said that they had lost to a competitor, and the circumstantial evidence in that situation suggested that bribery may have been involved. So you see also the impact that is having in terms of competitiveness. You need to have a competitive and a fair playing ground for businesses within Rwanda and within the countries that we operate in. And then the other point that is important is also the consequences of lack of business integrity. we are all aware of some of the global examples, like the Wirecards of this world, the Steinovs. But even closer home, like in Kenya, we have the examples like Imperial Bank and other companies that have collapsed because of lack of business integrity. So we also think that lack of business integrity poses an existential threat to businesses. And obviously then what then that does is to impact the business environment within the country.
Can you go a little bit more into the details of how it poses an existential threat to companies? Because at the end of the day, when you tell private institutions and private companies that this is something that you need to actually pay attention to, I think the question would be why? So giving like practical examples of how it affects them might be something that opens people's eyes.
So when I introduced myself, I said I do forensics, but I also do business restructuring and insolvency work. And one of the studies that we did is we looked at all the businesses which have come to us when they're insolvent. Basically, they've gone into inability to pay their creditors and will be put into liquidation and so on and so forth. And our analysis suggested that in each one of the cases that we were handling, there was some form of economic crime that actually contributed significantly to the collapse of the business. These ranged from asset misappropriation, where we found that entrepreneurs got to a point where they were actually diverting some of the funds, some of the capital, and some of the resources to other uses irregularly. Cases to do with bribery. Bribery and corruption, what it tends to do is that in the short run, it may give you the impression that it is helping you to win in the market. But what eventually that does is that it increases the cost of doing business. We've actually dealt with businesses which are in very viable industries, but which have collapsed because of the corrupt practices that they were involved in. For example, one company that we dealt with was in the construction industry. Because what then that does is that it means every time you're going into a procurement, there's an additional layer of cost that you're creating, so that you can win that tender, so that you can push your payments and so on and so forth. So it also increases your cost of doing business compared to other people who are doing their businesses in a more straightforward manner. So it gives you short-term benefit, but our analysis shows that in the long run, it actually is a major contributor to bankruptcy of businesses, both here as well as globally. I've given the examples of Wirecard and in the past, entities like Enron. So it does actually have a direct impact in terms of, profitability, cost of doing business. The other aspect is in terms of ability to attract capital. And this is going to increasingly become an issue. In the course of doing our work, we are seeing that businesses, when they are trying to access capital to expand, will come to us, for example, to do for them a financial due diligence, as well as a tax due diligence. One of the most recent development is that we are seeing businesses telling us, also do for us an integrity due diligence. Check what the practices of this business. Has this business been mentioned adversely in relation to a corrupt practice or a bribery kind of an allegation, even if it is just out there in the open source media? And we've had very many transactions whereby the investors are saying, okay, we like this business, we like the cash flows, but we are concerned about the integrity issues that are coming up. The third point is also, you find that where we are trying to access capital from is from the Western economies, for example, like the US and the UK. In the US, you have got the Foreign Corrupt Practices Act. In the UK, you've got the Anti-Bribery and Corruption Act. Those jurisdictions are becoming very stringent in terms of enforcing these requirements. So what you then find is that if you are trying to attract capital from providers of capital in those jurisdictions, you can't access it because they are concerned that the ramifications will be very significant if they are caught up in businesses with this type of issues. So those are some of the ways in which you lose, competitiveness, you lose from the point of view of cost of doing business, access to capital, and those type of considerations.
That actually brings me to Dr. P. As a member of the Africa Business Integrity Network, why is this business integrity very, very relevant to our country? And why is it that everybody who speaks about business integrity somehow ties it into it with law? Why is that?
Thank you. Rwanda is a country which is developing and which is showing up in terms of business support. I think it's very necessary to have the compliance programs. Why? Because building a business which is not compliant, it will be like building a house on a sand. Because at any time that business, it can collapse. Sometimes people, they think that engaging in non-compliance behavior can be rewarding. That may be true, but that is on a short term. But when you look at a long term, it's an entire loss. And again, I would say the compliance in Rwanda, it goes beyond the necessity and becomes somehow imperative. Because when you look at the regulatory environment you have, which is increasing year per year, it will be very hard in the future to have a business which is not complying. If a person takes like a simple example of a corruption, I'm going to say this because most of the time when you talk of a corruption, we think of public sector, which is not correct, because who corrupts, who receives a corruption? Probably the public sector is corrupted, but who does the corruption? It's the private sector. When you look at the index of the Transparency International Rwanda for 2020, it is mentioned that people in the private sector who were asked for bribe, the percentage was 17%. And the people who accepted to pay the bribe, it was 12%. What does it mean? It means only if 17% was tested, 12% it failed. In other words, only 5% has been able to say, no, we are not engaging in corruption practices. So this is a strong message that we need to understand as people who are in private businesses. And as I'm still talking about this corruption, the Rwandan law is strong enough because it sanctions both passive action and active corruption. In other words, it says the person who receives corruption is punishable, and the person who gives corruption is also punishable. So that is the regulatory environment you have. For the businesses which are regulated like banks and financial institutions, I think today the bar is very high, and the obligation is to be compliant is very high. So I would say from a regulatory environment today, there is no room. It's an obligation you have, and there is no alternative. We have to comply, or our businesses will be running at a high risk.
So what is the impact of having business integrity, for example, on a country like ours?
Thank you so much for that question. Rwanda is not an island, and probably we need to learn from what is happening in other jurisdictions. When you look at, simply if you put in Google the corruption scandals, you will find a long list, a very long list of businesses that collapsed because of engaging in corruption practices. And we would also say that in Rwanda, we may have some examples, probably not be in big numbers like those cases that happen abroad. But every time we hear some news of public auctions done by the Rwanda Revenue Authority for people who fail to comply with their tax obligations. So those are the losses, and that can have an impact, a negative impact on the business. And in 2021, it was reported that the amount that was recorded in corruption was more than $14 billion. That was only in Rwanda. So there's the figures, they speak themselves. But beyond that, if you've been following recently, Nigeria and South Africa, they were grey listed. And we don't wish Rwanda to be grey listed as well. Why the two countries were added on the list of grey list countries, it's because their compliance level is very low. And the overall consequence of becoming grey listed is that the cost of doing a business, it increases. It does increase. You are here in Rwanda, you are doing a business, but when you want to partner with someone from Europe, from USA, the first thing that the person will be looking at, the person will look at your country. How is the overall status of your country? If the overall status of the country as Rwanda is not good, it can be an opportunity that can be lost for you, or the opportunity cannot be lost, but the requirement will be increased. So all of us, we can be affected, either individually or collectively. Thank you.
Thank you, Dr. P. Let me bring Giselle in here from the Rwanda Finance Limited. You represent this company, which is a private company mandated to promote and develop Rwanda as a leading destination for international investment and cross-border transactions in Africa. Would you briefly tell us what your institution does to promote investment in Rwanda and why compliance and business ethics are important in Rwanda?
Yes, thank you, Florida. As you just mentioned, I work for Rwanda Finance Limited, which is a government agency that is mandated to promote KIFC, Kigali International Financial Center. Kigali International Financial Center is not an entity, it's just an ecosystem in general with investors, regulators, service providers, and promotional agencies like us, Rwanda Finance and RDB. So it's a government initiative to increase, which will lead to the increase of financial sector contribution to the country's GDP. As of now, the financial sector in Rwanda is contributing to Rwanda's GDP at the rate of around 3%. And among the visions of the country, of the 2050 vision of the country, we want the financial sector to increase its contribution to GDP at the rate of 11%. So that's why this initiative was put in place to transform Kigali as an international financial center, where we can attract investors in financial sectors to increase its contribution to GDP. So what we are doing as Rwanda Finance Limited, we are coordinating the ecosystem, those regulators, service providers, and attracting investors in financial sector. So what we've done so far, I think many have seen that there have been reforms in laws to put in place enabling environment. Different laws were changed to accommodate internationally recognized practices, different legal structures, so that investors can come in Rwanda to invest. We've also tried to look at the taxation to make it favorable to investors in order to attract many of them. And another docket that we really work on is on skills, which is directly linked to this program. Of course, we want to attract investors, and they want to find professionals. And when we talk of professionals, we'll hear they have to be having integrity, of course. Investors won't come and they find when they're dealing with local maybe businesses or service providers, they need to be having business ethics. So in a few words, that's what Rwanda Finance is doing. And our value proposition, we're really looking at compliance, as Dr. Pai was saying, and transparency. Compliance in the sense that we need to comply with international standards. Rwanda is part of different international organizations, and Dr. Pai mentioned something of being grey listed, and there are different countries that were grey listed because of not complying with international standards. As of now, Rwanda is being assessed with the ESAMLAG, which is East and South Africa Anti-Money Laundering Group. If now investors are coming in the country, it's of course, investors are looking for an environment which is transparent, which is compliant. So businesses in Rwanda should be compliant, and they won't partner with businesses that are not transparent, that are using dirty money. So we're working towards compliant environment. It's a journey, but that's what we're looking at. And of course, easing operations for investors. Then to your question, Florida, yes, as I mentioned, KFC won't be successful if the environment is not favorable. So investors will come and will need to work with trustworthy businesses, trustworthy people. So business integrity is very key, because to attract and retain those investors will depend on how we're now we're complying with the laws, because the laws are clear, but now how are they being enforced? So yeah, I think that's it. Thank you.
Thank you. So from what I'm hearing, on an individual level and also on a corporate level, integrity, business integrity needs to be at a high level. Does it make your work harder if the index is showing that Rwanda is not doing well? What are the challenges in a nutshell that you're meeting, trying to attract investors into Rwanda now?
Yes, because it's something that is still new, and people really, well, it's the truth that people will need to gain a lot of money, and you will find that in those non-compliant or those not good, I don't know if I could say good business relations, that's where people get a lot of money, but in a short term, of course. So what we're doing, we're trying to do workshops with different stakeholders, those service providers, businesses, financial institutions, where the investors will keep their money, so that we can all have common understanding, and you can understand the good thing of having a compliant environment. If we are grey listed or blacklisted, no investor will come to Rwanda. So we don't want to be there, and we don't want to go there. It's a journey, and we are trying to make people, all the players, aware of the necessity of being compliant and having business integrity. Thank you.
Thank you, Giselle. Let me bring you back in, Lars. Why is business ethics increasingly important for Rwandan firms and ability of Rwanda to remain competitive in Africa and the world, in your opinion?
Okay. So George and everybody else started to touch upon this, right? The cost of doing business, whether it be involved in terms of markets and all the rest. But let's go back to the basics, the essence of doing business as firms, as companies, and all the rest. The only way that we do business in this world is based on trust. The customer has to trust that the supplier will be giving them a good or service that is of understandable and transparent quality, right? And then on the other hand, the supplier of those goods and services has to trust that the customer will actually pay them what they need. So, you know, the essence of business is really about how do we build trust when we talk about that. So even when we take about what is the value of a firm, well, you have profit and loss and all of that other stuff, but it's really the balance sheets. It's that perception of the brand value that gives value to what a firm is all about. And that is based upon years of experience. That is, again, based upon the perceived value in society of a company. So we've heard about the risk, which is clearly if you are caught in an unethical business activities, that the risk is you're going to go out of business, you're not going to be sustainable or resilient. The second risk is clearly to your brand, all right? So then let's go. Frankly, in Africa right now, corruption does pay. As we've heard, you know, from our colleagues here, corruption pays at least in the short term. It might not necessarily, we know it doesn't work in the long term. But corruption, at least for now, is something that people engage in, and to make a short-term gain. So what we need to have in business is access to market, access to finance, and business opportunity, right? Those are the three essential things that we need to have in business. So let's go through all of them. Access to markets, right? If I don't understand the market I'm trying to enter or to compete in, I am not going to be competitive. So business ethics comes into this in terms of that transparency, understanding that there is fair competition. In terms of our ability to enter into markets. Nothing like a corruption scandal scares away finance. And if your firm is engaged in this, then your opportunities to secure loans are going to be in danger. If you are either a angel investor, a private investor, a commercial investor in terms of banks giving loans, and you have customers who are at least even alleged to do this, you're going to be spending a lot more time and attention because your loan is now at risk. So it upsets the whole market in terms of access to finance. And then finally, let's go into the biggest issue, right? If all of us are in business, at one point we have an ROI that we have to look at in some calculations of whether you're going to do business. And what is that percentage that we start in terms of the discounted rate that we're going to use? Well, we know that discounted rate is based upon a lot of different things, and one of them is risk, perceived risk in the market. So you might be profitable as an individual firm in Rwanda, but you are not going to be if that discounted rate because of perceived risk is high for Rwanda, but you also share in the perception. People can go to Europe, they can go to Asia, they can go to other continents. So it doesn't really matter whether Rwanda is a shining example of business ethics. You have to make sure that your neighbors are as well. And so what happens next door is going to affect you in terms of that. And in terms of the risk rate that you are and the cost of borrowing money in terms of all of this. So business ethics is the building blocks. We can't control, everybody loves, so this is the funny thing, everybody loves to talk about corruption. I found in business that everybody loves to talk. Now I have the pleasure of knowing some of the captains of industry in Kenya. So I'm going to have to talk to George because one of the problems I have, when we have drinks on hotel rooftops, and we're talking about how much was paid in corruption, I can't get a straight answer from any of them. It comes down to, I don't really know. They pretend like they will. In public, they'll say, we're not engaged in this, we support business ethics and integrity, but in the final analysis, they don't know. And so that's the other important thing. Let's talk about what you can do. You can build your associations and your members on the premise of business ethics and integrity, because then there will be long-term members of your business associations. As business people, if you start in terms of as you grow, it's really easy to adopt business ethics and integrity when you're small, and as you grow, then to make that work. Because it's not about your own personal ethics, it's about the culture of business ethics in your company. And as business leaders, it's up to you to drive that forward to ensure that you don't have loss. So I'm going to end with the last statistic that I've got to get here before George because he's a certified fraud examiner. So this Association of Certified Fraud Examiners does a study every year. And every year it ranges between 8 and 18%. And they survey only 2 countries in Africa, but they do survey quite a few worldwide. All right, what are they talking about? 8 to 18%. That is the loss of, that is theft, internal business theft. If you don't set up compliance systems and you don't do risk management, you're going to run the risk of losing 8 to 18% on average in terms of internal fraud or internal theft. So let's forget about external corruption, which is a big problem. But let's talk about how do we build a culture of business ethics so that we can reduce our own internal costs and increase our own profit margins. And we can do this, frankly, by building companies under and things that we can control, right? What happens in Rwanda, what happens in Africa, you can't really control. But what you can control is what happens in your own companies. And you can start by really focusing on corporate governance, business ethics, and business integrity.
Can you, Lars, can you really be able to get the real numbers that a company loses, both internally and externally, when it comes to lack of business integrity?
Well, I mean, I think you look at, you can do that, owners can do that, frankly. I mean, I think it's quite apparent. I mean, we have systems now in terms of tracking monies that come in and out of companies. The question is, this is internal, this is your dirty laundry. You don't necessarily want to air your dirty laundry, so business owners might know about these things. As they're larger and larger firms, it gets easier and easier to hide some of the bad things that might happen. But yes, you are able to frankly track this. You're able to know how much you are paying in terms of external bribes. You are able to eventually calculate how much you're losing. So when we use these averages, we can come, if I could come to any of your companies and I can say, look, you give me 6 months to a year and I'm going to reduce your cost by 15 to 25%, right? I mean, I should be a millionaire by now. Okay? If I can reduce your cost by 15 to 25% by adopting compliance, business ethics, and integrity, then why is it not happening? Why aren't more firms coming to KIAC and our ABIN network in terms of this? So I would say to you, you have two things. You have the ability to raise revenues and the ability to reduce costs. Business ethics and integrity helps you raise revenues because you build your brand and your reputation, and it helps you also reduce your costs internally.
George, what has been your experience as PwC in terms of working with the Rwandan private entities and companies for compliance?
Yeah, so in terms of economic crimes and business integrity, I think the fact that Patrick and I have an active forensic practice in Rwanda suggests that, of course, there is some element of lack of business integrity in some of the businesses that we deal with. If we were to go to what the numbers are telling us and some of the surveys that we do, I think when we looked at the last survey that we did, which included a specific report for Rwanda, in East Africa, the prevalence of economic crime amongst the organizations that we surveyed was 63. So 63% of the respondents told us that there was an incident of economic crime within their organizations. In Rwanda, it was a much lower number. It was 47%, but still there is something happening in there. I think that's also backed up to with the Transparency International statistics that tend to show Rwanda as doing much better than the counterparts in East Africa. So the experience is that actually there is some element of these practices. But what actually worries us more is what probably may not be getting detected, because the other thing that these surveys are telling us is that a large number of these organizations don't even have compliance mechanisms through which fraud and economic crimes can be detected. Now you can't measure what you don't know. I think Laz was saying it's easy to measure what is lost, but I'm not too sure it's very easy when you don't even have any form of compliance or detection mechanism within your organization. So one of the things that we recommend for organizations, of course, is that at least have a compliance or a detection kind of a mechanism, so that at least you know what you could be losing. So that's the challenge that we see, that other than the regulated space of banking, insurance, and investment funds, you don't see a lot of organizations actually investing in monitoring or in compliance, which is one thing that we actually recommend. Whether it is because it's not a priority, that's one of the factors, because there are many other problems that the business owners want to deal with. But why is it not a priority? It's probably because people have not internalized the consequences that Laz has talked about and everybody on this panel. The other thing is because in some cases it's business as usual. In some of the organizations, it's ingrained in their culture that for us to do business in this particular environment or in another type of environment, bribery is part of doing business. So why should we be trying to track it? So those are some of the experiences that we've seen with businesses. One of the more interesting points that we also noted from the survey was the number of people who said, we didn't think we were required to report when we came across an incident of bribery or corruption within our organization. So also is a question of what is the tone at the top, what is the tone in the middle, and then what obviously then becomes the culture of the organization. Is bribery and corruption so commonplace that when I come across it, it's just like any other transaction I would come across. So therefore, people are not necessarily feeling that they have any responsibility to report. But maybe when people understand the consequences, then it's important that we are actually talking about consequences, particularly from the long term, from a sustainability perspective, that maybe people will actually realize that if I want this business to actually last my generation and the next generation, we need to actually look into these things.
George, you have articulated something really that I was pretty much aware of, the lack of information and the lack of an understanding that businesses need to build systems into their own operations, and also something that Lars touched upon, that when it is actually in the internal flaws are discovered, for the most part my experience has been that they would want to cover up the dirty laundry, which brings me to Dr. P. As a lawyer that is working in this environment, are you seeing the same kinds of things that are you seeing the same kinds of concerns that I have? Because where internally companies that have not put in place systems, and then they are losing so much money, but not because they want to lose the money, but they are working business as usual. And they are now aware that actually there are tools and systems that can actually help them plug those gaps internally, and then have also reporting mechanisms and their interaction with the law as well. What has been your experience, and what would be your advice to private companies?
When George was speaking, something came in my mind, and which was complemented by what we said. And that is an issue of mindset. I'm saying this because, as a Council of Elders said, we who are in a legal practice, sometimes you find where a client may not want to pay a lot to a lawyer, but wants to pay more than what the law is asking to bribe a judge. So, what does it mean? It is like to say, you lawyer, I trust your abilities, your competences, but whatever you can do, if the judge has not received something, whatever skills you have, the result will not be good for me. So, which is wrong. That is an issue of mindset. So therefore, what needs to be done, number one, is about awareness. Our business community needs to be engaged and become aware enough that integrity, ethics, compliance is very key for the success of every business. And also the other side must be understood well. As we previously mentioned, on a short term, that non-compliant behavior, it can reward. You can pay a bribe, you can get a business, but that cannot be sustainable. So that is why for me the first action to be taken is about awareness. Number two, as a part of this entire program, we need to be taking some actions to build a business enabling environment which is compliant, and the benefit will be for those people who are engaged in the business. Yeah.
Thank you. Lars, what are the best practices from other countries that we can borrow a leaf from where necessary?
So I have, one of my mentors is this person called Alinu Manju Pipidi. She's the author of the new integrity forecast, which is going to replace Transparency International's work. And, one of the interesting things when I was listening to her talk about was corruption has been tracked more or less, since 1950. So we've and who has been tracking it? World Bank and IMF. And when you take a look at the world and you try to see how we would imagine, right, as we have these periods of economic growth, globalization, reduction of poverty across the world, all of these good things happening, that we would imagine, or you would perceive, the problem of corruption is going away. Well, frankly, in terms of these indices, when you take a look at them, they're flat. And there's not really any great improvement worldwide in terms of that. But there is hope, because in the last, I'd say, 20 years, there's been two essential things that have occurred, which answers your question. The first thing is we've had these laws that have been created that are directly affecting business, and those are the Foreign Corrupt Practices Act and the UK Bribery Act. The UK Bribery Act actually goes after and says it's illegal for companies to bribe other companies. So it's even goes beyond the other laws that exist. But these two laws have had an influence in terms of changing corporate behavior at the large level. Another thing in terms of changing corporate behavior that I believe has really begun to take off is this whole issue around corporate governance and corporate governance best practice, which is fundamental in terms of how companies are beginning to look at resilience or sustainability. Because most family-owned firms, frankly, don't last 2 generations in terms of their ability to continue. But then let's get back to the real point. And so what is the third thing? It is something that we call collective action, right? And this is what we are all about. So in terms of collective action, it essentially says that the government has specific roles and responsibilities. So the first thing that they have to do is pass laws to make corruption illegal. And most countries have done a really good job in terms of that. Problem is in implementation. The second thing is we have to have civil society, like all of those, these NGOs. You guys are civil society, as all of these representatives associations. So you're civil society. Your job is really to report on malfeasance that you see, right? And to make sure that you as associations live and are above a very high standard. And sort of when you have a member that might be accused or convicted of corruption, you need to have systems to kick them out of the associations, because then their participation could taint your reputation as an association. So that's one in terms of collective actions, but it's also about the journalists reporting on incidences of corruption and all of the rest. That is critical. So let's say the civil society really serves a role in terms of the watchdogs. And then we finally get to the main point, which is the business community, and that which Victor was talking about, which is what is the role of the business community in terms of fighting corruption? And what we're saying is the first order of business is get your own house in order in terms of set up risk management systems, compliance systems, make a commitment to corporate governance and business integrity, all right? And then work together, hopefully through these business associations that are represented here today, in terms of creating a better enabling environment that allows better access to markets, better access to finance, and better business opportunity, especially for what? Look, it's going to be the firms that we haven't even imagined yet that are going to transform Rwanda's future and create jobs and economic growth, right? So those are the firms that don't even exist yet and that we need to try to bring here in terms of the next 5 or 10 years. And so if we can do that, then we have a way to change that. But then, this is the secret about collective action. It's about all civil society. It is about the private sector, and it's about government all coming together to solve those problems. So where you see that happening, you have transformation. Where did that happen in terms of examples? It happened in terms of Singapore as an example everybody likes to use. It has happened in terms of Europe and some of the sort of, I would say, under the EU, sort of as a continental type of initiative in the last couple of 20 years or so. Not that they don't face still a whole bunch of problems. It has not happened in the United States. In terms of other shining examples, there usually end up being, and this is where there's hope, smaller countries. So we do point, I think Mauritius was raised. Mauritius was one of those examples that was able to transform itself in the terms of the past.
But now let's continue. Does anybody else have questions or comments to the panelists? Otherwise, I'll just give the panelists 2 minutes each to give famous last words before we wrap it up. We'll start with you, Giselle.
Thank you, Florida, again. I think this is a very interesting program. We'll all benefit from it, and we really need to contribute to it, and specifically for us at Rwanda Finance, it's really going to help us. We are trying to bring in money in the country, so we want to sustain it, we want to retain it, and that money will benefit every one of us, our businesses. So let's work together, avoid corruptions, and maintain business integrity and be professionals so that we can all increase our country's economy. Thank you.
Dr. P.
Thank you, Florida. I think this is the starting point. Probably there will be more opportunities to continue for the future, including the awareness sessions, information sessions. But in addition to that, we will also be providing some training, which can be individual training or collective training on how to build a business with integrity, ethics, and compliance. There will also be some opportunities to provide the consultant services where we can take a given company, a given business, identify the gaps, design the models, policies, and procedures that can help the company to be compliant. So I think we, as our colleague said, it's a long journey. It's a long journey, and I hope that we'll be together in this journey, because those are things, they cannot be done by one person. There is a need of all of us. So I have hope that on short term, medium term, and the long term, we'll succeed. Thank you, Florida.
Thank you, Dr. P. George?
No, first of all is to recognize this is a very timely discussion. There's a lot of talk about corruption in the cover pages of the newspapers in Kenya that you talk about, that tends to focus on public sector. So the supply side of corruption is not getting any conversations, and I think if there's no giver of the bribe, then there's no bribery that's going to happen. I think my key takeaways that I want to go with is, what is the role of private businesses and organizations in the fight against bribery and corruption? It has to start with being persuaded that it is a worthy cause. So of course it's very important as business owners and managers, you've got to be persuaded that it's important to have business integrity. Hopefully this type of discussions will take us there. Now, on the assumption that you have already been persuaded that it is important to have business integrity within your respective businesses, there are measures that you can take to foster that within your businesses. I have 3 takeaways. One is to establish policies and procedures, defined compliance, functions within the organization with clear KPIs as to what it is that you want them to achieve, and regular assessments in relation to how effective they are. So one of them is the policies and procedures. The other one is awareness within the workforce by way of training programs, as well as just also ensuring that everybody within the organization shares the objective. And when it comes to training, it actually needs to be targeted. You need to train somebody about bribery and corruption by respect to what it is that they do, the work that they do. How is it that they are likely to be exposed to bribery and corruption? What should they be looking out for, as opposed to necessarily having, generic programs for everybody within the organizations? They need to be targeted to what it is that the respective individuals are doing within the organizations. And then the third thing is that organizations are dealing with millions of transactions. So it's not humanly possible to monitor each one of those transactions. So to what extent can the organizations leverage on technology? We have tools, we have technologies that can be used to flag suspicious transactions. We have technology that can be used to monitor conflict of interest and things like that. So those three key takeaways, given the audience is made up of representatives of private organizations, I think those are some of the measures that they should take. But it has to start with being persuaded that it is necessary. Otherwise, nobody will do it if they're not persuaded that it's worth it. So I think that's a valid conversation.
Thank you, George. Lars?
Okay, so I think I'm going to spend a little bit of time. You get to listen to me for a little while longer after the break or after in a little while. So what I think I'm going to talk about, given what I've heard so far, is that, you know, it's going back to what John F. Kennedy said, which is ask not what your country can do for you, but what you can do for your country, right? And so we've talked a little bit about what you as individual companies and leaders within your companies can do in terms of this. But let me talk to you as leaders of business associations. Again, I would go back and posit that one of the things that we do at SIPE is work with a lot of business associations, and we spend an awful lot of time taking a look at governance, because that's one of the things that they need to have in terms of sustainability. So in terms of policies and procedures and even your constitutions, do you have a code of ethics? Have you signed a code of ethics? Has your board members signed a code of ethics? What are you going to do when one of your companies, member companies, are alleged to have engaged in corruption? What are you going to do when they are convicted of corruption? These are important questions for you as leaders of business associations to ask yourselves. So that's taking a look at your own internal associations and your houses there. Then the next question to ask, and you can partner with KIAC in terms of some of these types of things, because this is what SIPE does. This is also in terms of some of the services that are going to be provided is one of the things that KIAC will do. Let's go beyond it. You need to think about strategic partnerships as organizations. And those strategic partnerships goes with a lot of different people here in terms of KIAC, SIPE, the ABIN network, the development, Kigali International Finance. These are strategic partners that you can work with in terms of as organizations, in terms of making a difference, right? So that you're not individuals. Then it comes down to individual leadership. There's nothing that builds a better brand than you're getting up there and being champions for integrity. There's nothing that does good in terms of celebrating businesses every year that have done a good job, both as, let's say, business of the year, but business of the year, one of the qualifications is, has this business really committed to business ethics and integrity? These are things that you can do as business leaders and as association leaders in terms of this. And then let me end in terms of sort of thinking even beyond this. You have a role and responsibilities as the captains of industry here in Rwanda in terms of not only educating your own children and families about, you know, the importance of ethics, but also about speaking out about this and educating other businesses. And so it's important that not only that you walk the walk and talk the talk, but you are out there as champions truly celebrating business ethics and integrity, so that in the future, when we continue to talk about Africa and specifically Rwanda, we can start to say, yeah, we have found a way to make corruption not pay and not be the way of the land. And really what we've done is we've built islands of integrity across the continent that can start to change this and create economic opportunities for everyone. Thank you.
Thank you, everyone. Thank you to the panelists for your enlightening discussion this morning. Shall we give them a hand of applause? Thanks again, and I hand back over to the MC.